you please? Could you please? Could you please? Could you please say the word? Now it's closing in. Nothing to bear and nothing to win. Nothing to win. Could you believe? Could you believe? Could you believe? Could you believe? Take my hand, I'll take you higher than you've ever been. You've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the charts. So Bitcoin got that move to the downside that we were seeing to the wick of the 712 level on the Coinbase chart. We're hitting it twice, but we have yet to reclaim this level here on the wick down below. Are we going to get this wick on the other time frame? We are trying to reclaim the next bottom daily close level, which happens to be this potential resistance SR flip here, that we have a wick here, a wick there. Are we trying to create some sort of bottom here? We have yet to reclaim it at 657 and do some real consolidation down here and get real bearish. Once you get the bears like bought in real good, then maybe you can start to get that squeeze to the upside. Right now it seems like the bulls are just trying to scare as many shorts as they can out before they make it to this region, if we do say so myself. We're starting to make our way down into this 0.5 equilibrium of the diagonal pitch fan after getting rejected off of the 0.65 and the 0.618 of this pitch fan to the upside. Let's take a look at high block capital. What is high block? Well, people lock their liquidity in the charts to get burnt to a crisp by the market maker, and we get to see where those crispy characters lie in wait. So let's go see who and where those crispy characters lie. So as Father Time progresses forward, we lose the bubbles that we had in the past. So all of these things that are resting here are basically were reclaimed from this drop down into the new highs and starting to break down into this liquidity, and we went sideways over the weekend. So the shorts that are pinged in, it's funny because it's all relative, so as they lose the bubbles, these bubbles get really bigger, much bigger. So the 91 million that looked small yesterday looked very big today. So we had this 198 million fall down to the downside. They came back and reclaimed everything up to the 50x level. At some point they will come back to that 30,925. Is it going to be today? Is it going to be tomorrow? Or is it going to be midweek reversal Thursday? Do we come down to these regions? They're trying to stop out these pools. They keep coming back to these 100x pools and keep saying get off me to these 100x guys, and coming back with a fury to take them out.
Fatality.
And as it stands right now, they're playing around trying to get pools that enter these longs that entered here, this 40 million 100x that entered up here. As they got the short pool here, they just keep wick-whacking both sides, getting the 100x longs here and the 100x shorts there, and they're just playing both sides, building an inducement trap to both sides. As it stands right now, you do have slightly more from this drop to the downside here in the short pool and up here as well than you do over on this side of the equation. However, when you start to expand your vision to the external liquidity range, that's where we saw the drop to the downside yesterday. Let's go ahead and lay it out for you why we saw that occur in advance. So if we go to the 7-day time frame, we were seeing this imbalance to the downside, and we said I'd be surprised if they don't come back and reclaim this, and sure enough they did and bounced off of that. Do we still have an imbalance to the downside? We do have some imbalance down to the 29.2 region if they like to come down some more. If you're being frugal, coming down to the 29,450 region is something they would like to establish. On the 7-day time frame, there is a slight imbalance to the downside still here, if I do say so myself. We're starting to build some shorts to the upside though, so be wary of that squeeze that could be inbound sooner than later as we expand our vision to the 1 month time frame. So the 1 month time frame is also what we were looking at in terms of imbalance in the charts. There's an imbalance that once they establish this 22 billion and 14 billion liquidity grab to that 31.8 region and sharply reversed back down, that they were establishing that they wanted to come back into these 29.4, 29.3, 29.2 regions, possibly speaking. And it looks like they have started to come back into that over here. They took back some double digits down in this region here. 13 billion at 29.8, 10 billion at 29.7, and 12 billion at 29.6. All of these taken back and bounced out of to take out another billion up here at 30,300, only to get rejected and come back down into these regions. So as it stands right now, we still have this 10 billion at 29.5. That's a hop, skip, and a jump away, as opposed to what? Above. There is no 10 billion above immediately. So coming down and spawning some divergence off of these double off the wick and these double digits liquidity pools. You got 18 billion at 29.1, 19 billion 29.2, 17 billion 29.3, 18 billion 29.4, and 10 billion 29.5 to reclaim. Do they come back and get all of this? I have no idea, but coming back for some of it, with the imbalance in the chart on the monthly time frame still being there and knocking out some of these 22 days of longs would be the play for a sustainable move to the upside, as we have been saying for quite some time. Let's go to expand our vision to the 3-month as we look at the external liquidity pools. Yo, what's up? How you guys doing? Fartality. All right, let's go to the 3 months. So the 3-month, starting to see this liquidity pool starting to thicken up in the 32K region all the way up to the 33K in the nearest pool. Do we come down into the 3-month and take out some of these 35 and 34x characters? If you do come down even lower, you do have some imbalances down below at the 24.6 and 24.2 in terms of larger time frame liquidity pools. Are these market maker positions because they left them on the table on the higher time frame of the 6-month? I'm not sure, but if we go to the 6-month, you'll also see that the imbalance is also down sub 24.6. So do we start to retrace and take out some of the stops for some of these guys who are setting it in this range in profit and get a little bit of bearishness before we surge out? This often happens where we kind of drop just beneath the consolidation range and then go up, drop beneath the consolidation range and then go up. So are we going to drop beneath the, I used to call this the dolphin dip back in the day before I even knew about liquidity. I just noticed it was something they did. They would create a bull pennant, drop beneath it, and then go up. So are they going to go beneath all of this consolidation before they spawn the divergence to go to the upside? The imbalance to these regions does suggest they could come into these 29.4 and 29.5 regions on the 6-month time frame. It's what I've been waiting for some time. So we will see if it plays out. On the 2-year time frame, we're starting to see the $197 billion up at 33.2, 157 at 32.8, and 175 at 32.4. So that's 2, 3, 4, 5, almost $600 billion up in this 33.2 region. So did they start to come down, get this 91 billion at 29.2 and then spawn some divergence to just surge up to this region? I would be surprised if they don't come into these regions to get this liquidity before a possible retrace down into the 24.4, which has a whopping $241 billion, and down at 15K you got 200 billion as well. So they don't always come back and clear everything, but they do come back and take most of it when it is imbalanced like that. You saw this accruing in October of last year, and they started to give the idea of a double bottom, but that was actually a liquidity grab idea. So they came down and created that 15K bottom and then surged out from there. So are they going to squeeze the shorts, give the idea of shorts coming down and then short squeeze them and then come down? That could be the case on the 2-year time frame as everyone gets bullish. All right, so let's go back to the monthly because that's where we still have the unreclaimed pools down below, suggesting that we could come back into these regions. We're at 29.9 right now, so we have to drop a whole whopping $400 to come down to this region. So now we're pinging both sides, just playing them like fiddles to try to ping in some liquidity. As you see here, the liquidity has gotten pinged. It's pretty even, Steven. You got 26, 23 on 26, 23 in shorts, 24, 37, 40 in longs. So you got slightly more on the last rise up here, and you had a little bit more in shorts here than you did in longs before that, and a little bit more in shorts than you had in longs before that. So as there's more shorts that start to build to the longs, at some stage, if they attack that external liquidity range, they will come back for these guys at 30,925 and beyond. Let's go ahead and look at our fib levels for the Binance chart and move into what we were seeing. So this is what we had for you from yesterday, and we got that smooth move. Let's go see if we're going to continue down to this wick or not. If you take the 236 level for this daily impulse retrace idea unless you can close candles above 30,724, you're not really bullish to come up into this region just yet. So you need to have some higher time frame candles close up in that region. All right, time to throw on our oscillators and see what's up. So here we go, oscillators on. By the way, link in the description for more. Scroll down to features and hit the toggle switch to see everything in its glory, or read about each component and toggle each component as we go over it. Alright, so as it stands on the 12-hour time frame, we're basically holding this super trend from June 19th all the way up in this region. We have yet to come down into that super trend level to wick off it. We have done that on the 8-hour time frame, so let's just go off of, we wicked off of the 8-hour time frame twice. The 8-hour cross down event is still strong, and we're seeing the base, the candles not yet close above it. As much as you see all this wacky price action on the 15-minute and all that, if you just take it to the 8-hour, it's a very smooth 8-hour candles progression of this momentum to the downside, the suppression, and you're seeing buyback wicks as they liquidate some of the longs, but overall you're seeing offloading of positions to the downside. So coming back down into this super trend level, if you break this 8-hour super trend, the 12-hour is next. If we go to the money flow, let's just make our descent, shall we? So we're going to do our usual descent through the time frames. You had previous bearish divergence on the money flow and the RSI, which played out, and we're seeing the Williams reset in a manner here. We're talking about that double bottom with the fertile crescent of the green oversold region that it occurs when you get that daily oversold idea. If you look at the daily time frame cloud, it is coming up to the wick thing. So if we did come down in a manner here like this and get bought back up in the cloud and started to make our ascent out of there, coming into this cloud region, and then kind of consolidating our way out of there within the cloud, would be the idea to see on the daily time frame. Coming back to kiss the cloud, this is your standard break up and come back to kiss the cloud and continue. It happens on all time frames. It's a fractal like idea. If we go to the 3-day time frame, when does the 3-day close? 3-day closes in 2 days. So we just had one, and we're starting to see that suppression of the baseline idea. Let's go back to the, let's see, Williams is getting to that point now where we said it would come back to this average, coming back to this as we go sideways, but we're actually coming down here, so we're getting to that point where this alarm could cross. We had previous bearish divergence on the money flow, which is starting to taper here at that 236 level. Couldn't close daily 3-day candles above that 236. So until you can close out a solid 3-day above this level, coming up to this region is moot point. So let's go back to the daily. Daily time frame starting to drop again, coming down to that 800, breaking 900 now. Money flow is getting beneath the RSI, suggesting you're winding up for a move to the upside here. When you get this disparity between the money flow and the RSI, I have noticed that it likes to gravitate back to it, and conversely, when you get it above the RSI, it starts to come back down to it as well in this manner. So if you start to see this on the daily time frame with the stochastics oversold and the Williams getting into that oversold region, watch out, because you could see a play to the upside at some point after the divergence is spawned off of the dead carcasses of the consolidated longs. If we start to make our way to the 22-hour, the 22-hour cross down event is also acting as suppression on the candles. We aren't seeing candles close above it, so it is still intact. And we got until just before the daily candle closed for this to occur. We still have yet to come down into that fertile crescent. It's been some time since we've been there, since April. This April 22-hour was a very nice play, that double bottom idea, the fertile crescent as we call it, with the rising sun out of there, boom. And I remember seeing that as some people were trying to short it. And yeah, if we look at this could still come down some more. This last bit of momentum to reset the Williams is what you got to be patient for. And yeah, still patient, ever patient. And if we look at the 12-hour time frame, we're also seeing that cross down events be suppressive as well. We had this back for you on Saturday, and ever since Saturday, if you just went off the cross down event, you could have had this nice 2% play just off cross down plays alone. We say the crossover events have you until they don't, and same with the cross down, they have you until they don't, and then you could just set your stop loss into profit. Don't need me, you just could use the Momentum Master Suite and learn to gain the confidence of what it is you see off the baselines. Well, what are the baselines? Well, they are your first signs of reversal. The baselines are one of the few leading moving average formulas you will find on the market, back tested to levels of pinpoint accuracy. So if we go to the 12-hour time frame, you are seeing that we are getting to that nice oversold region on the 12-hour with the stochastic suppressed beyond belief. It's at zero, just at sub-zero almost level. And this is why the coupling of stochastic with the Williams is the thing to do if you want to see why the suppression of takeoff on the stochastic RSI happens, because these momentum indicators work in conjunction with one another. Now we're breaking the 800 level into the 700. Money flow and RSI is still at a similar level here, but the Williams is getting to that double bottom juicy level on the 12-hour time frame. Now we want to see this cascading to the other time frames, like the 6-hour is also getting to that sweet position. You previously had money flow beneath the RSI, and it's attempted to come back with this buyback wick here, and it did. And so now you're starting to see a sell-off, even though that buyback tried to induce some buying on behalf of whales and whatnot. It probably just trapped retail up here, and now they're coming down to stop out those leveraged retail traders. This is getting to a level here where it is quite nice on the 6-hour. The Williams is getting to that zone, so you're getting wound up on the 6 and the 12-hour. 22 could come down just a little bit more for my liking. If you come down to the 4-hour, for some reason they like holding it when it's bullish like this, they're not going all the way for hard resets. It's very rare do we see this dip beneath the like 80 level for the last few times. It's been basically holding at the 85, 88 level. Ooh, nice, we're getting that move. We're getting the move! Hold up. We're getting the move. Oh yeah. Let me see. I'm still in a short here, so I'm trying to see if it's worth closing at a certain level or not. Let's just go into the 5 minute and see what's going on here for the liquidity grab. Let's go into, ooh. Yeah, I'm gonna close 75% right there. Alright, give me a second, sorry. Alright, let's see. Let's go. Alright, so finally coming down to that level. Let's just market close this thing. Alright, so if we're going to take a look at that idea here, so we did reclaim that. Let's go ahead and see what it did. It pinged in a bunch of longs too, but we got 300 million pinged in shorts here off of that, and they immediately came back for the 100x. They came back and said no to the 100x almost immediately, and that was what that buyback there was, the 100x gobble of that 100x breakout candle, and they're coming down into these regions. And this is where you consider what is going on. Are we breaking into that region to come lower finally? Let's go see what this looks like when they gobbled it up. All right, give me a second, sorry. Okay, so let's go. I should have just, it's too fast for me. They could have reclaimed it right there. So I'm going to market close that. Boom. All right, decent. I'm out. All right, so where are we gonna go from here? Let's see. So they're pinging in different types of liquidity. Sorry, we were doing our descent through the time frames, and they just came back for that 500. So they did go back to the wick. The wick has been reclaimed, ladies and gentlemen. I don't know if it has been exactly reclaimed, but good enough by my standards for the most part. So let's go back to that hourly. So this has been reclaimed. This was a pool from back in the day, and we're starting to see this wick here at 500. They came back to the 517 level thus far. And so as we were saying, the suppression of those baselines is pretty deadly when you cannot close candles above on these higher time frames. It's just showing that fatigue, and we came to that adaptive moving average or sorry, the weighted moving average on the 6-hour time frame. If we go to the 4-hour here, actually we'll leave that up for a moment. So the 4-hour time frame also coming down in a manner of these failed takeoffs of the suppression of the Williams on the higher time frames, pushing down on it with the baselines. You had some false crossover, cross down signals as they were faking out here, which is why I started to turn to the 8-hour, and the 8-hour gave those very clean, like, nope, don't pay attention, just pay attention to this. And so looking at the different time frames and seeing where the wicks coincide with the information of the momentum is where you can take out the noise. And it looks like we're breaking the super trend now as we speak. And yeah, if we look at the 4-hour time frame, we are seeing that potential hard reset of the 4-hour. We could be spawning some divergence as well, which is why I'm flat at the moment. I should have set the order in directly. I was not expecting it to be so, and it could keep going. Looks like it could keep going with the fury here. This is just the beginning. We are entering Wednesday. Normally Tuesday and Wednesday complement one another, so we could see something coming down, even down to the 28,690 region. I would bet the farm on it, but if you're already in the short and you're chilling like a villain, why not? And yeah, that was a vicious 15-minute candle. And that was a huge thing that could still keep going down. And let's go see what when I see that much in 307 in short liquidity, it looks like they could be also coming back into this too. When you're in a trend to the upside and you reached like the wick and got what you were talking about with the longs on that consolidation long idea. Let's go see if they knocked out what they knocked out on the 7-day, shall we? That was a nice little move. Alright, so they came down into the liquidity here, took out this 6 billion or so on the 7-day time frame. Let's see if it appears yet on the monthly. It might only appear on the daily close. Sometimes it's delayed here. Yeah, it's a little bit delayed, so it will come down into this and see if it got the 10 billion thereafter. Sometimes it causes the 29.4 to close as well if it gets down close enough. So they could have taken 28 billion instead off of that candle. So if we look at the 5-day time frame, or 5-minute rather, sorry, 5-minute, a lot of noise. So just seeing the cloud here also getting suppressed, can't get above the cloud, and finally dumping out of the cloud. Hourly cross down also still in play. So all right, so Tuesday, Wednesday, are we going to see Wednesday complement this downside play? It's been a very nice battle for 30K here, and we've seemed to have failed it and bearishly retest and are breaking down, and the next level is 28,690 on this daily time frame support structure, which is backtestably true. So we could be coming down into these regions for some liquidity in recovery of these vector candles if we cannot hold this 29.5 region. All right, let's go ahead and take a look at what they're pinging in at the moment as well for the longs. they came back and grabbed that 30700x pool of shorts without hesitation.
Fatality.
And they also came for that 10 billion on the higher time frame, fatality to them as well. And as it stands, you still have this large amount of 300 million up here in this region. So it'd be nice if they swept it entirely. They haven't really came back completely for the wick just yet. They could come back completely and go even down to this 29.2. I think we went as far as to say the 29.2 was the furthest pool worth taking, especially on these higher time frames. If we look at the 29.2 region, there's like 35 billion and even 29, even 34 billion on the 3-month time frame. If we go to the 6-month, $29.4, 34 billion, 29.1, 49 billion. Yeah, 2-year time frame. $91 billion at 29.2. Yeah, so coming back to the 29.2 on the 2-year, if we're going to get that 2-year pool up there at 33.2, the sustainable move would be to take out that 91 billion at 29.2 on this time frame of the 2-year. Nice play. Shout out to anyone that took it. Cheers. And so that's why these cross downs, pretty deadly, not to be ignored. Even this one, I was saying, don't ignore it. If we hold those baselines and we keep going, same here, we hold those baselines to the opposite side, we can't close candles above it, just short it, keep in your shorts. And if it looks all messy on other time frames, just stay within the time frame of the trade you're looking at. With the cross downs here, the 8-hour, the 6-hour, this had you at hello. It was very clean price action despite being ugly price action on these other time frames. All right. Well, ladies and gentlemen, we did come back for the wick. So now what? So the wick is reclaimed. Do we spawn some divergence? Let's go ahead and try to look for some money flow and all this other fun stuff. Divergence. We just closed out an hourly as well. So some of the stochastic will have updated. Four-hour time frame closes in 3 hours, so that's going to be just around the pre-daily candle close. And then you have 6-hour closing in 57 minutes. Looks like it's trying to get suppressed. You have this as of this moment, it's purple, which is a stop hunt volume candle. So this could be a stop hunt for some continuation play. Once again, the 6-hour and the 12-hour Williams are getting into these nice regions. You're not seeing the double bottom just yet, so getting it into this little double bottom idea before the rising sun. So we could be seeing similar to here. Let's go back. So, you know, hoping for a V-shaped out of here with just coming down into the green. It's gonna take a few to solidify a bottom, takes time. So this is, you know, how many days is that? That was like 3 days. So 3 days to make this double bottom idea. So coming beneath the consolidation of 29.5 and then starting to formulate a bottom. Maybe you come back for the 100x and start to meander around, but it's going to take time to find that sweet spot of the entry. Very rarely do you get the V-shaped ideas. I mean, recently they've been wick-whacking here and here, but that's been kind of manipulation of certain things, not something you really want to expect in the charts. You would like to find those very nice double bottom on the Williams and all that fun stuff. All right, so the 12-hour, the 22, also it will be interesting to note how the 22-hour closes in 5 hours. Does this, because you get 2 candles per day with the 22. You get that 22-hour candle and then the 2-hour candle. So you get a double whammy in terms of stochastic resets. And so this stochastic could give you a nice Williams double bottom here, and you could get that 22-hour play out of here. I'm not interested in remaining in the short for a long term personally, because we are in a bullish trend, so I'm willing to wait to see if we can start to build a narrative to come up to those pools up in the 33 in this region. I'm only interested in here. I'm not really one of those maxis that sees it going up to here just yet. All right, any questions? Anything on anyone's mind? Do we have sound? Or that wick made me death? Getting paid live, yeah. Yeah, sorry, I had to close that. I couldn't just let it sit there. I mean, chances are it could keep going, but I'm not gonna. I was waiting all day for that to occur, so. And yeah, when I see these large pools, shorts like this, I'm just like, nah, man. Because look, I'll give you an example before we lose this guy to Father Time, all right? So check this out. They did the same thing. You had 241. You're like, new highs, yeah, BTC 32K, woo! And then they just went, nope. And they still, well, they got this guy now with that too, but just nope. And so the same thing is definitely inbound at some point for these guys. You know, they're like, woohoo, zero, Bitcoin to zero. And then they already got the 100x. And so are they going to come back to 30K as if nothing happened? I'm here for it either way. But that's why when I see this large amount of pool of shorts enter, that's when I consider exiting my short. I'm like, I don't want these guys ruining it for me. So yeah, as it stands right now, you have an imbalance up at 30,600. So retracing up into this 50x pool at 30,600 to grab that 300 million alongside their comrades in 50x is the larger pool in this 1 minute time frame, and then coming up to the 31,195 at some stage to get the 25x partners at the top of the range is what you would see on this 1 minute time frame. But this is why looking at this in terms of external and internal liquidity pools, like if you look at what's happening in the 1 minute chart here, it doesn't really matter when you look at it in the larger scale and you see all this shorts up above at 33.2 and this 29.2 pool of longs here that we are waiting to come take. And they could easily come down to this too. They could spike up to come back down. This 50x guy here is not that far away, so coming back to 30,000 even and taking out that 50x pool, and then even playing around some more and then dropping lower is still on the table. Will be here for you. So now that we're flat, we can take it both sides now. I was thinking recently about getting a 𝗥𝗲𝗶𝗀 account so I can do the schlonging thing, because I've never done that before. I'm always on one side or the other. Okay, so where do we come from here? So we got the projection, so now I'm kind of just like, now what? Do we keep going lower? The 15 minute wanting to close in 6 minutes here. let's see what happened to total and Bitcoin dominance and the USDT dominance. Bitcoin dominance it dropped slightly. You had that spike up to USDT dominance. This is what people getting kicked out into USDT is like. Psst. all those 20 days of consolidated longs out like that. If you look at the total, we also dropped beneath the 236 level of the bullish projection, which needs to be reclaimed for that idea to continue to a bullish narrative. We need to close out some candles above 1.156 trillion. Currently we're at 1.154, so we need about $2 billion to come back in above this level, and then you can have these bullish narratives continue. So as the 12-hour cross down occurs, you're getting reset on the 12-hour too, similar to Bitcoin on the total, looking like it could start to see a reversal at some point. They never did come back for that wick for total. Total is more bullish than Bitcoin was just a moment ago, as they hold in XRP and other alts as they position for an upside play most likely, and hit the reset button on a lot of these things. Let's go take a look at XRP and see. Whoa. So they're holding pretty bullish in terms of that surge out after winning the case. No repositioning. They're not giving back anything really. Did total 3 drop by that much? I don't think so. I guess it did. So we were talking about coming back to that golden pocket idea on the 6 month, and we started, or sorry, on the total 3, and we started to do that. Well, we can leave that there until it happens. So the overall total is holding more because of Bitcoin than total 3. We were putting out that idea of, but we just reclaimed some of that. So reclaiming that 1.156 trillion is for this trend-based fib to continue to the upside on total. So technically we did reclaim the wick. We created another wick, and that's why you created a wick and we reclaimed that wick. And so if you start trading like, you know, fairly in this region and create those double bottoms, then that's when you can kind of get out of there in a smooth manner. But just like this wick was reclaimed, and it wasn't reclaimed but came back eventually to reclaim it, it's the reclamation of the wicks that are some good ideas. And then this basically all of these days of longs, 26 days of longs getting knocked out, is what is good to see for a long play. So all 26 days of these long people hoping for 20 to 32k up in this region getting faked out, and some of the people bull trapped up here getting liquidated, and off of their divergence you could find the promised land play to the upside. Long-term swing idea is coming soon, perhaps, if you come to this region. Take your pick as to where it's going to occur. You got to look for the divergence play. Sometimes divergence spawns on the Williams. Shout out to Rainier for pointing that out. I need to look into coding that more once I get out of my summer school schedule. I worked 11 hours today and then non-stop was was up at 8 a.m., like out the door at 8 a.m., awake since 6 a.m. So, where do we see this? We are getting the rising sun, and they don't like to take it beneath that 83 level. So both times they've had that. Technically, you're at a lower low, and you're making a equal low. This is Class C on the Williams. Lower low, lower low. So I'm liking the 6 hour time frame in terms of this kind of getting fertile crescent potential on the 6 hour, and then the 12 hour as well. I still think I can be more patient though, so I'm going to do that. Maybe I miss out, or if you're really feeling antsy, you could put a little bit and leave some DCA potential. Sometimes I do like a 25% margin idea, and then do another 25%. You could scale in, and then if it doesn't go, then you can take it up. Let's do some fibs. I'm gonna go take off the momentum and just go and do some fib work. Let's take a look at some fibs here. Let's do something experimental too. We're gonna go into another chart. So let's just take off our heads up display. Boop, 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 boo. Heads up display off, and then we're gonna go into a different chart. Alright, so on the fib levels here, this is recently something I've been messing around with, which is the fib channel. You kind of use, with the fib channel, you can use different kind of 3 clicks to create a channel for where we retrace into. Looks like we're going possibly to the 886 level at 29,387. We broke down beneath that 786 level. Let's just get out of this and try something with the fib time. Fib time, where is it? Whoops. Alright, enough messing around, let's see. So equilibrium of this 4 hour impulse to the upside would be at 29K even. If you look at the golden pocket, it would be at 28,493. This would be a recovery of some of this consolidation here. We have yet to reclaim some of this liquidity here. There's a fair value gap here on the at 29.2 that coincides with the pool we were talking about. So coming into this vector, there's also, they recovered up to this point, which is the wick. So in between this region here for a fair value gap recovery within that 29.2 to 29.5 region is a very nice possibility of finding some kind of play there. If you also take this trend-based fib extension level and you just drop it from the impulse here to See the rise up here. We never went above that point. 236 is your entry, takes you into that region at the 29,365 within this fib level. As it stands currently, we bounced off of the 0.65 just a moment ago at 29,549 exactly. All right, so that's about it. Let's go see if you have anything to request. Ah, we're here to get paid. Nice. Well, hopefully you did as well. I was putting out that, when we were up here, I was putting out that retracement idea for that short. I didn't know it would be like that, but as I said, unless you reclaim this, like unless you get down into the dirt here and just take out all these longs, like this is just, coming up to here is just not realistic. So it was just a bunch of trapping retail and liquidating them so they're not there for the move when it actually happens. And so that's why I'm not even jumping the gun just yet, because this could also just be a trap and they could take it even lower. So we're gonna wait for some double bottom goodness with that fertile crescent to see, because it's not gonna V-shape out of here. I don't think it'll do that. I mean, even here when we went down into this region, we had a good 12 hours to look at it and find that fertile crescent on the 4 hour before we got out of there. And we even had a rocket ship for you that printed on a Thursday, and you got that alert to your phone on the here. No, this one. You had that alert to your phone, 7 time frames oversold. You can't get more than 7. So when you see this 7 with the rocket ship, it's pretty spot on. I remember I have that rocket ship saved somewhere. I'll post the link there later. But yeah, every time the rocket ship spawns, it's pretty good in the bull market. When it's, the nukes will not be as accurate as your bullish, but the nukes were pretty accurate in the bear market. So you'll be accurate with whatever side you're on most of the time. So coming down into this region, we got a candle possible, yeah, the 29.2, the 29.2 wick here, and this basically this part of this candle, this liquidity here, that's on the higher time frame that we talked about here, that 91 billion on the 2-year time frame, could be come back to at some stage and spawn some divergence. It could meander around, come up and come down. I don't know the inner workings, but we'll keep you posted. I got to get some sleep. I got to teach another science lesson in the morning. Yeah, so I don't. Once again, keep your eye posted on the 6-hour time frame. The 6-hour is closing in 37 minutes. As it stands right now, it's a pink vector, which means that it is a stop hunt candle. It's not a repricing red vector. So you had a red vector, green vector. So this was meant to be red, but it got bought back. And then this is a stop hunt. So there is some bullishness to the fact that this was a big green candle, and they were probably looking to price it lower and couldn't because there was all these orders in here. So there's people repositioning into longs perhaps. So it depends on your levels. Coming down to that 29.220 would reclaim this 6-hour vector. It's also a 4-hour fair value gap. And also I believe it's an hourly fair value gap. Like you go to these different time frames, it traded fairly within these time frames, even to the 29,390 region. So you get these sputters from these wicks that did trade fairly within that wick. So depending on how precise you want to be, you can go to these lower time frames to look at it, but it lines up with the liquidity on the higher time frame. So anywhere in this region, really looking for these levels to hold and spawn some divergence. That was a nice wick to the reclaiming of the wick. Alright, ladies and gents, I'm looking for a long now at some point. I would like to see it come up to this region and take out that external liquidity pool at some stage. I'm satisfied with the knocking out of some of the liquidity. I'd like to see it come a little bit lower, but you never get exactly what you ask for. You get pretty close sometimes. So yeah, we'll see. It is Wednesday though, and we did see a move to the downside, so generally you do see a continuation of that. But in the last few weeks we've been seeing Tuesday and Wednesday being kind of sideways, and then Thursday was the move to the upside, the midweek reversal. So maybe Wednesday will be sideways and Thursday is the reversal timeout. So we'll play it by ear as we approach that 22-hour time frame. Once again, the 22-hour is getting oversold on the Williams and getting to that sweet spot alongside the 12-hour and the 6-hour. So you're getting these subtle medium time frames that are getting in a nice manner here. You still have some potential for this to close bearish in the next 34 minutes. Watch the 6-hour. If you look at the 8-hour, you also have this in a nice manner here. Money flow coming beneath the RSI, suggesting you come up at some point. We've seen that play out before, so be aware of that. Alright, ladies and gents, that's all I got for today. That's my story and I'm sticking to it. So thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on into the live, and we'll do the same, bringing the fire, the accuracy, the precision, all that fun stuff, and we will catch you on the flip side. Peace.